Now we're going to be moving toward the fifth part, private sector sustainability framework and coalition. Okay, so now they've talked about few bodies which are tracking, okay, which are tracking the environmental part, or sorry, how which are tracking the sustainability part. So let us go into this section. So one of the group that is launched is PRI, which is a principle for responsible investment, which was launched in 2016, so 2006. And these points are important from the exam perspective. Okay, so what if you want to join the PRI? Okay, investor has to commit what? They will incorporate ESG into their decision of investing. Okay, they will become active owner. That means they will promote ESG being used by companies. Okay, they will ask their current investing firms where they have put money to give disclosure related to ESG. They will ask, so they are making sure that investors who are putting money, they are becoming more aware through this responsible investment group, and the companies are forced to give details. Okay, promoting acceptance and implementation of the principle, collaborating for the implementation of the principle. That means helping other investors to also come on this group and promote this entire logic, and actively reporting activities and progress towards the principle. All of this is important from the exam perspective. I would request you to read it properly. And this is a coalition of investors, okay, and they have a lot of other alliances also, like for example, Climate Action 100 Plus Alliance, then Roundtable for Sustainable Palm Oil, okay, Alliance to End Plastic. All of this, few of them is given in the book also, but the ultimate aim is to maintain this sustainability part. So PRI focuses more on the ESG part because it is investor specific. If I take you towards the book, they've talked about the book also talked about the World Business Council that happened in 1992, where they focused on corporate social responsibility best practices. But the formal group basically came out in 2006, which was the PRI. They have given all the details over here, and few things that we talked about, the Climate Action 100, Palm Oil Roundtable, all of this is also covered over here. Okay. The next part, which is the framework for sustainability risk, important under this is the Sustainability Accounting Standard Board. Okay. So important initiative and framework that came out because of the discussion on sustainability is that they wanted to bring out some standard. Okay. So they wanted to homogenize. Homogenize means make it equal or standardize how things work, things are going to be disclosed, how the reporting is going to happen with respect to sustainability. That's where they came out with Sustainability Accounting Standard Board. Okay, and that is the idea that we are going to be talking about. And you can read this as a independent non-profit organization. One second. One second. Okay. Yeah. So I was talking about the Sustainability Accounting Standard Board basically was created because they wanted to create a standard to make it easy of how sustainability will be disclosed and reported. Okay, and this is an independent non-profit standard setting body which gives guidance and disclosure related standards to companies and investors. Okay, now if you read this part, this is important. Okay, marking this a star. So it is a independent non-profit standard setting organization that aims to guide and promote the disclosure of financially material sustainable information by companies to the investors. So they are tool used by the companies so that their investors can get proper information. This is important. Okay, and there are five broader dimensions: social, human, governance, business, and environment, which is also given in the book. These are the example: social, human, business, leadership, environment part. Okay, not important for the exam, just giving you the overview how the sustainability standard board actually works. And there are other groups also, which are like GRI, which is the Global Reporting Initiative. Okay, and this came out because of the Exxon oil spill. that happened in 1997 in the sea spill, and it created a lot of damage to the environment. So they came out with a standard or reporting, and to make sure that they have a lot of influence. I mean, they can force companies to do a lot of reporting with respect to environmental part or climate risk related part or sustainability related part. Okay, and they are focusing more and more on reporting the disclosure aspect of it. So some initiatives are focused on addressing, like for example, there is Partnership for Carbon Accounting Financial, which focuses on greenhouse gas reporting. There is also a task force for climate related financial disclosure. This is important because they have also come out with a recommendation, which is also going to come in your further chapter. And they have talked about moving the economy to net zero economy. This is also one of the important chapter in your book. So that is the transition and the related risk, or the physical related risk, that has been discussed by the task force for climate related financial disclosure. I'll take you towards the book now. Now in the book, okay, this is the sustainability accounting board section. Now over here they've given you some reference to the initiative and coalition. Okay, now you don't need to explicitly remember everything. Okay, but I'll just mark it which all points are slightly important. Okay, so these 2 points are definitely important. You should remember what is this group doing, who is the group formed for, okay, and what is the initiative talking about. Apart from that, you can read the business roundtable section for reference. Okay, they're cross sectoral, means it is not only for one group of people, it is across the sector. Okay, we have talked about the sustainability board, we have talked about the global reporting initiative that has been highlighted. Okay, then partnership for carbon accounting financial is also discussed, and then task force for climate related disclosure is also there. We have completed these sections. Okay, these are the same table that we saw in the book. These two are important, so I'm highlighting it over here. Let us go toward the questions part. Okay, in this section, the first, what is the sustainability accounting standard main objective? Okay, to provide cross comparability metrics, no. To lobby government definitely not. To promote among companies, no. To provide financial advice, this is the right answer, because these standards are there for the company so that they can give information to the investors. Answer is D. The first question, the answer is D. What is the role of the principle for responsible investing? Okay, promote acceptance and implementation of principle, wrong. Conducting research on, this is also wrong. Developing best practice on sustainability issues, I don't think so. The answer is this: encouraging investor to incorporate ESG into their decision making part.